Good morning, everyone. Welcome back. Today, before starting our in-depth analysis, I will quickly summarize the main takeaways of this video right here, since your time is precious. Fiverr is one of the most recognized digital marketplace companies globally, with a good business model, stable financial position, and a really interesting long-term play. Additionally, when looking at this DCF model, we can see that currently Fiverr is undervalued, and it can lead to nice buying opportunities in the possible accumulation area in the chart. Now, since the details of this model and the fundamental analysis is crucial, sit back and relax, and let's start with this video, as I can promise you will not regret it. And remember to like and subscribe if you enjoy the content, as it helps a lot and it's free to do. So what is Fiverr? Fiverr is an online marketplace for freelance services with two intertwined ecosystems, a buyer's ecosystem and a seller's ecosystem. These ecosystems work within one big flywheel of value creation. Let's start first with the seller's ecosystem. As more opportunities arise, it will lead to higher earnings for sellers, which will lead to seller growth and retention. This will increase the quality of supply that is present in the Fiverr ecosystem, which will lead to higher LTV, more cross-category and higher increased spend per buyer within the platform, which will loop back again and lead to more quality demand, which will complete one loop of this cycle, leading to better opportunities for the sellers to be able to fulfill. Therefore, Fiverr needs to manage and grow both this ecosystem at the same time to have a well-balanced and well-functioning marketplace. So what are the value propositions that Fiverr offers to the buyers and the sellers ecosystem? For the buyers, Fiverr provides transparency and certainty of price, value for money, access to an expansive catalog of digital services, and access to a diverse pool of freelancers. The value for sellers is no bidding and negotiation to win projects, maximize deal flow, flexibility and control, frictionless payments, and for both, a trusted brand for customer service and customer support. For industry analysis, it is important to understand the competition that Fiverr is currently facing. Fiverr's main competitors are Upwork, Stir, KFRC, HRT, and Kelia. It should be noted that from the price return graph, in the last 3 years, Fiverr has done poorly when compared to its competitors. Additionally, if you're interested in our in-depth analysis of Fiverr's main competitor, Upwork, I've already done a deep dive on it, and you can find it on my YouTube channel. When focusing on the main players, we can see that across this industry, there is a high compound annual growth rate for revenue growth, really high gross profit margins. However, there are low EBITDA margins. And we can see how Fiverr is excelling in gross profit margin and the 3-year compound annual growth rate for revenue growth. Fiverr's competitive advantages come from the value proposition that they offer to both the buyers and the sellers, as stated before, to create and harvest a brand awareness, which is crucial to create and foster a digital marketplace. Additionally, which is one of the biggest competitive advantages, is multi-homing costs. After years of operating within a platform like Fiverr, having a good reviews, maybe like a 5-star 4.8 system, then moving to a newer platform where you have no reputation, it will be really costly, and is why sellers' entrenchment is a key value for companies like Fiverr. These competitive advantages lead to significant cumulative cohort performance. This is key when understanding Fiverr's exponential performance. On the left chart, we can see the cumulative return to performance of the marketing investment by cohort. We can see that quarter after quarter, the return is 1x, 2x, and even 3x sometimes. This leads to the results that we can see in the chart on the right, where we can see the previous cohorts still coming back with a high retention rate and accounting for 63% of the revenues. Therefore, these are two forces pushing up revenue: new cohorts acquired and the previous cohorts continuing to stay and interacting with the Fiverr's ecosystem, leading to significant value propositions. Fiverr's CEO is Misha Kaufman since 2009. He's been the CEO and the founder of Fiverr. And since IPO, there has been a slight underperformance price-wise when compared to the S&P, with an exuberance phase during the 2020 boom, followed by a deep crash and now back into consolidation. The financial situation of Fiverr is healthy. They have 463 million in total cash, with a total debt of 461 million. Fiverr has the highest current and quick ratio compared to its competitors. However, it has the highest debt to equity ratio and the highest debt to free cash flow ratio, which is a downside. There are 5 main risks present with Fiverr. The first is macroeconomic factors, specifically inflation and recession, that can hit the economy as a whole, and Fiverr will be affected with slower earnings growth. Secondly, could be the rise of generative AI. In the future, basic work that can be done through freelancing could be easily and cheaply done by AI. Thirdly, growth depends on both ecosystems, and there is a fine balance between clients and freelancers, as if one is lacking behind, it will greatly slow down the flywheel. Fourthly, they have to maintain the brand value. If that deteriorates through a possible scandal, then the flywheel of value creation will turn the opposite way and destroy value for shareholders in a fast and aggressive way. And finally, Fiverr has still not achieved sustained profitability, as right now costs are higher than their revenues. Therefore, there may be insolvency risks in the future. However, right now, their cash position safely covers their debts. This is my Fiverr DCF model going up to 2030. This model yields a perpetuity approach value of 50 and an EBITDA approach value of 66. When taking the average of these, from the current price, we get an upside of 120%. The inputs used to get to these values are, I extrapolated the revenue growth by starting at 13% and then picking up to 15% before averaging back down to 12%, which, considering the average growth rate, but the lackluster 2022, I extrapolated based on the worst years. For cost of revenues, I extrapolated for profitability starting in 2025 and around 2028 aggressive cost cutting for maintaining and improving profitability. These cost of goods sold assumptions are not the most conservative. Therefore, if you want to try different numbers out, you could download this model in the description and play to see what happens with the different values for cost of goods sold. And these assumptions yield the 2030 estimates as seen here. And through these values, with a 21% US corporate tax rate, a 10% discount rate, and a 3% long-term perpetuity growth rate, we get the perpetuity approach value. And then with an EBITDA multiple of 23, we get the EBITDA approach value of 66. In conclusion, Fiverr is a fast-growing business in a good financial position with good management. However, Fiverr has a lot of risks. Therefore, check the risk and reward for you. However, personally, Fiverr at these levels offer a great diversifying opportunity in the accumulation area. If you reached the end of the video, you're awesome. And if you enjoyed, please like and subscribe, as it will greatly help and support the channel. Have a good rest of your day, and I'll see you next time.